What's up, nerds? Another episode of Stock Doc here on a Saturday. Hope you're having a good weekend. Go Chiefs tomorrow. Big Super Bowl. I ain't worried. Frequent question I get asked. My bankroll's not too big. I only got 20 bucks, or I can contribute 20 bucks a month, or 10 bucks a month, or 5 bucks a month, whatever it is. Person's concerned that they don't have a lot of capital. Can I really do anything with investing and trading? And these are the exact people that I'm trying to help. These videos are here to be a resource for you, help you break the fear of trading, or break the fear of inexperience. So this video is starting a new account with 20 bucks. So I want to ask a few questions before I start buying. I've created my account, so again, I showed this on multiple episodes, multiple videos, but does Morningstar think the stock is undervalued? Morningstar is, they're professionals at determining where there's value in the stock market. So I use the filters, free through public library. If it's not available through your public library, try and get a membership at a different library, or ask a friend who's got access to a public library that has it. And you get access to Morningstar Premium through the library. I think it runs maybe 150, 200 bucks a year for access to Morningstar Premium. But if your kind of capital isn't consistent with being able to spend 150 bucks for a year, find a friend who's got a library access to Morningstar Premium. So just getting this all in one slide. This is what I'm filtering, looking for stocks that Morningstar feels are undervalued, so they have a price per fair value ratio less than or equal to 0.7. It's a little bit arbitrary, but I find this is kind of the money zone for me. So we're looking at a 30% discount or better. I'm always filtering healthcare, sticking to what I know. And we're looking at small companies with market cap less than or equal to 1 billion. If you're putting this into your Morningstar filters, that's 1,000 million. Do I feel like the company looks promising? So I'm here to be a resource and happy to help. Take a look at some of the products. And one of my advantages as I attack these stocks is I can understand from a medical standpoint how the products work, what the future looks like for that product, how promising the science looks, and I'm trying to share that as a resource with the viewers on the channel. But you may have knowledge in a different field or different industry, and you can put that to work too. It doesn't have to be college education. You may have you may be a electrician, or you may be a car salesman, have some knowledge about electric vehicles, or whatever it may be. But you put your knowledge to work for you. Again, if you want to tail some of the plays on this channel, I'm having great success myself. That's why I made the channel, to use my methods to help other people out. So the channel is partly here for that, but the whole point of the channel is not really to focus on, you got to buy this stock or that stock. Actually, the process and understanding the process, I think, is more helpful than any one stock recommendation I could give. So I'm not going to spend a lot of time going through all these filters, and all these stocks, but I ran the filters through Morningstar. 190 stocks showed up, and I just put a little checkbox on some companies that I'm fairly impressed with, think have excellent science on their side, and stocks that I think the risk is vastly outweighed by the reward. These are stocks that most of them, not all of them, but most I've owned or currently own. So I have these on slides. You can hit pause and kind of build a watch list from these. But these are all stocks that I think if you hold for 5 years and you come back and look at the gains from this entry point, I think if you put equal parts of all these stocks in your portfolio, I think you're going to see explosive growth that beats the market by several fold or orders of magnitude. That's the goal that I'm trying to accomplish for myself and help other people accomplish. So question 3 is, how recently has a company had a dilution event? This is ITRM, or Iterum Pharmaceuticals. I think this was, last week. They announced that they were creating some more shares. You see this vertical drop off in the stock price. And somewhere in here, I think I snagged a few shares in my mom's account. And already that move has paid off. The stock's maybe rebounded 3% from there. But it's a stock that is already meeting all the criteria and the filters, and then it has this massive drop off in price. So I'm doubly getting a discount by buying this stock. And these companies are all cash strapped, so they do have dilution from time to time, 1 to 4 times a year usually. It's not the end of the world. I've held stocks through multiple dilutions. I don't always just buy after the dilution. And everybody grumbles when their stock price goes down 10 or 15%, but it's okay. I mean, it's part of the process, and it's a great time to lower your cost average. It's a great time to start a position. But these are relatively low drops in price compared to the several fold increases in price I think is in store for these companies. So great time to start a position after a dilution event. And then also the question is, what are the broader market conditions doing? So recently my mom was kind of watching some videos, and I was talking with her about this, and she had an account that had a bunch of Disney and nothing else, and she said, Disney's been good to me. And I said, well, okay, well, we're going to get rid of that Disney, and I'm going to do better. And so we started her account probably like somewhere in here, and it wasn't by design. It was just that that's around the time, I think January 26th, the exact day I took over it. And so I went through this process of starting a new account exactly how I'm showing you in this video and in the subsequent slides. And we had some immediate success. Day 1 she made 6%. And then all the GameStop, AMC, Reddit stuff's going on, and everybody thinks the world's ending and the market crashes. So, a few days into this, we're actually down by 5 to 10%. And my mom's like, oh, do you know what you're doing? The market's crashing. And so this is a great line from The Wedding Singer. And, this is how I felt. One more outburst, I'm going to strangle you with my microphone wire. I got this. Chill out. Enjoy the ride. And we're doing great, by the way. We're not even 2 weeks into this, and she's sitting on a gains of about 17-18%. Meanwhile, Disney's gained, I think, maybe 4%. So we're doing great. We weathered that storm of the broader market-wide downward ride, and our gains are doing great. So don't worry too much about broader market conditions. When there's a lot of stress and anxiety on the market, it's a great buying time, and makes for big gains down the road. Also, what has the recent behavior been of the stock? So I'll kind of show you. This is one of my favorite stocks. It actually has had some great success lately, so it's not quite meeting the parameters of a buy for me. Morningstar thinks it is discounted but not quite 30%, and so it's not one that I'm necessarily advocating for people to buy. But you can see this was a 6 months ago or more. CLSN or Celsion. It's one I had my eye on and been in and out of a little bit for the past 6-8 months, and this is just a post I dropped on Facebook. I really liked it at $2 or $3, and probably would have bought some, but and this was before I was using the filters super tediously, but I liked it at $2-3 quite a bit. It ran up as high as $6.50 in the summer. Stock crashed because their chemoembolization drug Thermodox posted some data that didn't look like it was going to meet its primary endpoint, and that product may be dead, it may not be, but as a physician, I get these clinical trial alerts, and I thought this was really cool. Ovarian cancer is not a particularly sensitive drug to immunotherapy in most cases, and they had some promising phase 1-2 data with this drug, Gen 1, and the stock was sitting at $1.09, which ended up being not so hot of an entry point, but that's okay, again, long term. So I scooped some of this a little over $1 last summer. And then in December, sold it to offset some gains for tax purposes. Got back in it shortly after the start of the year, around 90 cents. Stock really took off. Still flagging as of a few weeks ago as more than 30% discounted. So I decided I wanted to put some of this in my mom's portfolio. I got in here. We're making big gains. I think I picked up some for my mom in this time here when it was sitting at about $1.30 to $1.40 range. But anyway, question number 4 was, what's been the recent behavior of the stock? We can see that in mid-January the stock squeezed to 280. So when I'm considering the recent behavior of this stock, and I was looking at buying in the 130s, 140s, I'm thinking, and this is when market conditions broadly were poor because of the GameStop, AMC, everybody freaking out. So I'm slowly adding a little of this in my mom's account, and I'm of the mindset, well, this very recently hit 280 during a squeeze. It's got a lot of run from 130, 140. So after we've considered all these things, it's time to go shopping, and we are looking for the stocks that get kicked in the nuts the hardest. We are parasites, bottom feeders, cheapskates. We're looking for the best deal to get in. So again, just showing some stocks that POAI, one of my favorites. I made a video on Apria, ITRM, currently holding some of this for mom. And this Matinas Biopharma, I think is what it's called. I wasn't really aware of it. It wasn't filtering, wasn't on my watch list. But my buddy texted me the morning of January 29th and said, buy some of this. I didn't, because I didn't really look into the stock, but you can see you've made 50% if you buy in 86 cents, or you've made close to 50% in just a week if you bought in here, because the stock has recovered and it's now trading around $1.21. So these are often really good entry points. Apria, I made a video somewhere in here. I got in at 538. So we're up 25% just on recovery from these ridiculous dramatic sell-offs. So I like to keep a watch list on Yahoo Finance. Always trying to keep it cleaned up, and with as many stocks that are filtering with 30% discount or better, and also some suggestions from friends. And during the day, these stock, wherever you see these percentages, these will all be either red or green. So you go to the bathroom, you're at work, but you go take a poop, and you see a big red brick here with minus 10% or minus 18%, and you already know these stocks Morningstar thought were undervalued. You're seeing blood on the street, major hemorrhaging of price in a very short period of time. And so this on your watch list is the equivalent of these usually steep vertical lines. So you can't really watch the graph all day, but you can watch your watch list, and to see, like I said, you look for the big bloody red rectangle, minus 10%, minus 18%. These are often awesome times to buy. So if I'm starting my position with $20, I'm going to grab a couple of the stocks that are highest on the list in terms of best discounts. So I'm going to grab a share of Benetech, grab a share of Bikel Biotech. I like POAI. It's one of my favorite stocks. It's got good momentum on its side, but maybe I want to try and get it at a price that I want it. So I'm going to put a limit order for 135. Maybe I'm going to put a limit order in for Iterum around 130, even though it's more like 133, 134. In Vivo, very high on the first page of filters at 140 or so. I'm going to put a limit order again, trying to get a good deal, get it at 135. Advaxis, one of my favorites, is still making the cut in the 190 shares getting filtered, but maybe I don't want to buy it over $1. I want to try and hopefully Monday morning pulls back a little bit. I'm gonna try and buy it at 98 or 96 cents or some pullback. So I've invested 10.58 of my $20, and I'm holding a little bit of cash in case any of this goes poorly. Now my experience is that probably 60 to 70% of the stocks when I get in on them, they're comfortably up 10-15% in the next couple weeks. But maybe you want to hold some cash because maybe these will pull back further, and you really want to get that average cost per share down. So you've got half of the capital that you started with, and you're gonna use these to buy them when they pull back. And then the question is, okay, when do I sell? I'm very confident I can get you into some overall average, very good starting positions. But when do I sell? Well, we want to keep our perspective. What's the S&P 500 doing? What's a good return for a year? 15 to 30% in conservative S&P 500 indexes. I shared this figure in another PowerPoint. If you make 1% a day in 253 trading sessions, you will end up with your account, if you add no capital to it, of 12 times your original investment. So 1,100% a year or thereabouts if you can make 1% a day. So with these things in mind, looking at, mentioned Celsion, if I have low capital and I want to make money fast, you see some really nice movement here from the 150s into the 170s. I'm going to take that and run. I'm going to take my 12-13%. I'm going to sell it. I'm going to use it to buy something that's even more undervalued or taking a beating that day. So that's an example. Celos is another one. Just had a great day on Friday. From a low of 283 and just powered through afternoon, and power hour gets to 342. You've made almost 20% in a day. And if I have low capital, I've got $20. I'm going to take this, I'm going to sell it, and I'm going to compound, reinvest all of this into stocks that are, again, getting kicked in the nuts. And we're going to repeat this process over and over again. Some of these stocks will decide that we love, and we're going to hold them until they get to $1 billion or $2 billion market cap. But when you're working with a low amount of capital, you want to have as many compounding events as possible in a short period of time. So we're going to take what the defense gives us, as I say, and we're going to put it back into something that's doing worse. Hope you all enjoyed the video. Again, you can do it even if you're starting with a low amount of capital. Take what the defense gives you, buy what's getting kicked in the nuts, and keep repeating that process, and you'll see that your returns are multiples or orders of magnitude better than the S&P 500 or some of the common indexes. All right, have a great day, everybody. Go Chiefs tomorrow.